In this video, we will talk about the real challenge behind every company setup. Because opening a company is easy. The hard part is getting a working bank account. If you are from a sensitive, high-risk or high-barrier country, you probably already know this. Let's walk through everything about banking in Hong Kong. What works, what doesn't, and what to expect in practice. First, why people choose Hong Kong for global payments. Because no currency controls, no capital currency restrictions, most business is done in USD even inside Hong Kong, no special approvals needed for offshore accounts, no restrictions on global expenses, special connection with China and recognition worldwide, Hong Kong accountants are used for offshore structures, and no questions asked about activity in any country if your structure is clean. Where can your Hong Kong company send and receive money? Anywhere. That's why it is a global payment hub. But let's be realistic. Some of you might already be asking, how does Hong Kong fight money laundering while having this freedom? And the answer is, Hong Kong banks have some of the strictest compliance in the world. We will cover that in detail in the next video. Before we get into where a Hong Kong company can open accounts, let's have a quick note about payments with China. China's banking is getting stricter. Many banks can send payments to China. China blocks transfers from sensitive countries. Every international payment is checked, and political changes may affect transfers too. So why we mentioned China in the video about Hong Kong banking? Because Hong Kong has a free trade agreement with China, many banks have branches on both sides, and many Chinese companies use Hong Kong affiliates. So all in all, compared to other jurisdictions, Hong Kong gives you access to China, but keeps you open to the world. And now the main one. Where can your Hong Kong company actually open an account? There are several options. Let's go one by one. First, traditional Hong Kong banks. HSBC, Bank of China, Hang Seng, Standard Chartered, etc. Solid, respected, and very hard to access. Today, in 2025, unless you are local residents or at least a Chinese national and have real substance in Hong Kong, office, director, staff and so on, it is nearly impossible. You might still have a chance if you are from a low-risk country and you can demonstrate business ties with China or with other countries. And if you are working with a strong business introducer, we will talk about them in the end of this video. If you are high risk, consider this one almost impossible. Second option, MSOs, money service operators. These are licensed fintechs like Airwallex or Revolut. They are not banks, they don't hold money under your name, but they open master accounts in traditional banks and assign you a sub-account. But for your operations, they essentially work like online banks. They have three key advantages. First, remote account opening. No need to come anywhere, unlike most of traditional banks. Second, friendlier to cross-border businesses. MSOs often offer local collection accounts in multiple currencies, in multiple countries. You can get paid in dirhams, you convert into Indonesian rupiahs and pay to your supplier all in minutes. It is possible because MSOs usually have many accounts in different countries. So when you make cross-border transactions through an MSO, your money physically comes and goes in different bank accounts. But in your online dashboard, it works like one. So all in all, this is a fast, simple and user-friendly interface. 3. Lower compliance barriers. MSOs are less regulated than banks, so they take on more risk. Example, I'm Russian. My Hong Kong company does consulting. That's too risky for traditional Hong Kong banks. They don't even consider my application. But some MSOs did. They look at the UBO, transactions, business model, and approved. Okay, MSOs have advantages, but compared to traditional banks, there are trade-offs. First one is trust. Some MSOs have been around for years and are relatively trustworthy. But still, if MSO itself has issues, your money is at risk. They are less regulated and your funds are not protected by deposit insurance. And if their partner's bank has issues, your money is also at risk. Example, the Wirecard collapse in Europe in 2020. This one affected many fully legal MSOs. Their clients' funds got frozen just because they used Wirecard as their partner bank. So when you work with MSO, you accept that your infrastructure risks are higher than with traditional banks. The second limitation is limited functionality. Some features that you can find in traditional banks simply don't exist in MSOs. No credit lines, no overdrafts, no fixed deposits, no interest on balances. Some cannot issue SWIFT letters like MT-103 or UETR. So when your business grows, you will probably need to find a way to open a traditional account too. A third one, country blocks. MSOs are cross-border by design, but paradoxically many of them block more countries than banks. Some platforms reject even legal payments from non-high-risk countries like Serbia, Bahrain, UAE or Kazakhstan just because they fall outside the MSO's compliance range. Bottom line on MSOs. Use one or two MSOs that fit your money flow. When volumes grow, consider a traditional bank account. You might ask, Roman, didn't we just say that it is impossible to open a traditional bank account? In Hong Kong, yes, but there are other countries. That brings us to the third option, offshore and foreign banks. If you can't open in Hong Kong, try a traditional bank in other countries. There are two strategies here. A, country-specific accounts. So you open an account where your company operates. It is useful if you do procurement or have clients in that market. For example, you buy goods from Egypt, open an offshore account in Egyptian bank. It is like a horse trained for one trick. It's not universal, but very effective for your specific case. And it is especially useful for closed markets where global payments don't work well. Second, global-friendly jurisdictions. If you need a flexible, neutral account, research places like Singapore, Cyprus, Malta, Switzerland, Luxembourg, Great Britain, Panama, Cayman Islands, Bahamas, and Belize. They are open, have no currency control, and often used as international hubs. But be ready for paperwork. This route with offshore accounts is longer and harder than with MSOs, especially for Strategy B accounts, because each country has different requirements to offshore companies, and they are often very high. Many banks ask for notarized, legalized, or apostille documents. You might need a substance in that country, and banks from some countries may only work with specific industries. Still, for founders from complex countries, that might be the most realistic long-term solution when your business grows. 4. PSP, Payment Service Providers. Think Stripe, PayPal, Checkout, etc. They are not banks, not MSOs, they provide online payments. They typically used by SaaS and online services, e-commerce stores, subscriptions, apps, marketplaces. If you do B2C, you will probably need at least one PSP. Most of them support Hong Kong companies, but it depends on your structure, UBO, and they pay special attention to your website and online presence. 5. Crypto accounts. These are not banks' account too, but depending on your client profile, they sometimes are used to hold assets and receive send payments. Yes, it is legal in Hong Kong. You can do accounting with crypto. You can report crypto as a corporate asset. But as we mentioned in previous videos, there are better countries than Hong Kong to do crypto. Not all crypto platforms accept Hong Kong companies. And if your UBO is high risk, expect a long due diligence and limited platform options. Also note, some custodial wallets don't allow fiat withdrawals or deposits. Many of them only allow trading, and your fiat bank or MSO may not like the fact that you use crypto platforms, especially if your UBO is high risk. You have all chances to exceed their limit of tolerance if they see a payment from or to crypto wallet. So be careful. Only use crypto infrastructure if you really need it and have settled fiat banking in the place first. 6. Marketplace seller accounts. These are not bank accounts, but internal balances that receive your revenue. You still need a real account to withdraw. Most global marketplaces, except TikTok, accept Hong Kong companies. Amazon, Shopee, Shopify, TikTok is an exception. They do not support Hong Kong entities for ads and seller payouts. Also, if you need a local or niche marketplace, check first. And you might have some troubles with running ads with Meta and Google Ads. All in all, most of marketplaces have no problems with Hong Kong. But still, check what your target marketplace allows in your target region. 7. COD accounts with logistics providers. Some logistics companies, especially in Asia, offer cash-on-delivery services, COD. They collect cash from your customers, hold it, and remit it to you weekly or monthly. These are not real bank accounts, but they are useful if your buyers pay in cash and you can't access local banking. We never heard they would mind against Hong Kong entities. Some of them can even transfer to third-party accounts. But usually you combine COD payouts with a real MSO or bank account to reconcile your funds. But if you have trouble with collecting local payments, consider it. I mentioned a business introducer several times. What is this? Some providers offer introducer services. They introduce you to the bank with a cover letter, profile package, and often a direct contact inside the bank. A good introducer also helps you to improve your case before submission, so the bank sees who they are dealing with. For new companies or sensitive cases, this can really help. But it's not magic. If your case is weak, even the best introducer won't save it. So focus on your structure first. What if your account gets closed? Yes, it may happen. I have seen it several times. It's not fun, and it is a nightmare for high-risk founders since they don't have many options in the first place. They rarely explain you the reason. Sometimes banks just change their policy and risk appetite. More often, they may close your account because they found your transactions suspicious. They either don't match what you declared on onboarding, or your activity and counterparties are doubtful in general. So, make sure your business introducers understand your business when applying. Always have at least one backup. Keep all accounts active. Diversify your money flow. Keep documents in order. Keep transaction logic clear. Stay out of adverse media and sanction activity, and make sure someone in your team can talk to compliance properly. Some consultants will say that I'm overemphasizing here. Focus on sales, not infrastructure. Well, they simply never lived it. When you get European passport, you just don't know how it works for people like us. If you are from high-risk or unstable country, you don't get the luxury of ignoring banking. Your options are limited. You don't want to run out of them, and you must put more efforts than others just to stay in the game. I have been through this as a Russian founder running business outside Russia. Global finance system just doesn't appreciate people like us, and I know we are not alone. That's why we are making this video, to help you avoid the same traps. Bottom line, the higher your risk, the fewer chances you get. Each account closure makes your path even narrower. Can a Hong Kong company function without a corporate account? Imagine this. You had a couple of accounts and they all got closed. Now every bank and MSO rejects you. It happens usually if you made serious mistakes, worked with bad agents, or your business is sanctioned and they found it out. So what can you do? Use the company for contracts and invoicing only. Look deeper for offshore accounts in third countries. Use personal accounts. In some countries it is acceptable if taxes are paid properly. Hong Kong tax office doesn't mind it either, as long as accounting and tax filings are done correctly. SDN banks. Well, if you're ready to burn bridges and they work specifically for your case, but think twice before you do. Sell the company to a low-risk founder and do business under another person's name. This can be legally risky and may be seen as even fraud, depending on your case. I will cover this topic in a separate video. And most importantly, talk to someone who understands high-risk cases. Most agents don't. But let me tell you this, when you prepare correctly and your business is legal, you usually end up with an account. It may not be the best or cheapest account, but it will be possible. So yes, a Hong Kong company can operate without a corporate account. Not ideal, but possible. And if nothing works, shut it down and start fresh. Better prepared and with a better plan next time. Final thoughts. Let's sum it up. Hong Kong is a strong base for global payments. It doesn't block currencies, countries, or offshore flows. Unique if you deal with China, that's why it is used by thousands of international businesses. There are many tools available for Hong Kong companies to do payments. Traditional Hong Kong banks, MSOs, traditional offshore banks, PSPs, crypto wallets, marketplace balances, and even COD accounts. You don't need to use all of them, but you do need those that work for you. Use MSOs first, then aim for a stronger infrastructure. If you are high risk, it is harder. You need to plan banking strategy, not just to apply randomly. Diversify. Don't rely on one platform. Build anti-fragility and prepare a backup. And account closure is not the end. You have options. If you can't find any, talk to someone who has been through this. Next episode, we go into the heart of these problems, banking compliance, how it works, what gets flagged, and how to avoid mistakes that kill your accounts before you even get started. It's not strictly about Hong Kong entities, but we will use Hong Kong as an example. See you there.